Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. This video is brought to you by the Rule Symposium, which we're going to talk about that more today as we have legendary investor Rick Rule on with us again. How are you doing today?
I'm doing great, Daryl. It's a pleasure being on with you. Thank you for having me back on your channel.
Yes, appreciate you spending your time with us. So lately I've been watching a lot of Milton Friedman. You were active during that time. I think was that late 70s, 80s?
Well, I guess the first time I probably listened to Milton Friedman would have been 1969 or 1970. He was, of course, a prominent American economist and philosopher for a very, very, very long period of time. I'm delighted to say that in the early 1990s, I had the ability to actually meet Milton Friedman and his wonderful wife, Rose Friedman, in conjunction with the New Orleans Investment Conference. And I can tell you that he was as polite and kind a human being as he was an intelligent human being. He was a wonderful, wonderful, wonderful man. Doesn't mean I agreed with everything he said, but that's a different question.
Yeah. Milton Friedman, I believe he was Thomas Sowell's mentor, and Thomas Sowell's his student or whatnot. And I know they had more of the libertarian philosophy. I think Thomas Sowell eventually said he felt it was more utopian, but that would be the idea that he would lean more towards. What kind of encouraged your philosophy and or whatnot, especially during that time. It seems like the libertarian movement was, very strong. I mean, when you had, Milton Friedman and many others that are coming out and very popular and very, well, I guess unpopular at some points, but very important messages that people were gravitating to.
Milton Friedman made the libertarian message accessible to a lot of people. He was a great economic mind. I would argue that Thomas Sowell was more of a libertarian than Milton Friedman, because Milton Friedman had more of a belief in politics and in community. And Thomas Sowell came to believe that the ultimate sovereign was the individual, himself or herself. So I would suggest that my own practical philosophy is more aligned with Thomas Sowell than Milton Friedman. That isn't to disparage Milton Friedman. He came, from a sort of a big institutional bias. And I think Milton Friedman probably actually had more faith in party politics than either Thomas Sowell or myself. I think Thomas Sowell believes that political parties are, at least for a while, necessary evils. But I think that he and I agree with each other in that they're evil. That your relationship with other humans needs to be individual, and it needs to be voluntary. That the coercion that's so often associated with even voluntarily formed groups, the social coercion, ends up being an impediment to maximizing your own individual potential and also maximizing the benefits of interaction with others. So I would describe myself as temperamentally more aligned with Thomas Sowell than Milton Friedman, frankly.
Mm-hmm. And they were both, so like the libertarian movement is more smaller government. So that I think they both argue for that. In everything. And so, I consider myself, I don't even consider myself. I kind of have this mix of views from different, libertarian, Republican, Democratic, or whatnot, and it's hard to really see things as black and white. But one thing I do know is that government has been the source of a lot of problems. That especially what we're seeing, now with inflation or whatnot. What's your take on that?
I think you're probably more pragmatic than I, which is to say that while I'm philosophically opposed to any government at all, I'm 69 years old. I'm not going to see it. I'm talking about something that's wonderful in concept, but has absolutely no threat of ever occurring. And I would suggest that your view of things, which is to say smaller government rather than absence of coercion, is a much more realizable goal. Philosophically, my libertarian philosophy comes from Ludwig von Mises, the famous Austrian economist who wrote the book Human Action, which was the most impactful book in my life. When you view questions in social science, I think you need to view them from two perspectives. The first is literally what is right, what is moral. And the second is what is practical. And from a moral perspective, I don't believe that people have the right to coerce through either extortion, which is to say threat of violence, or fraud, other people. I think that's morally wrong. The fact that I think it's morally wrong is interesting rather than relevant, because most people in the world believe that they do have the right to coerce other people if they're coercing them towards an end that they themselves feel is justified. I believe personally, and poll after poll after poll in the United States has shown that the majority of the citizenry of the United States wouldn't pay tax if the power of the police wasn't invoked to charge them tax, which is to say that taxation is extorted from people. I don't think that.
I was saying I remember that article with Wesley Snipes. I think he went. I don't know if he went in for like tax evasion or what, but there's been quite a few people that went to jail for tax evasion and such. So I can see what you're saying right there.
So from my viewpoint, I think if you look at something like taxation, you need to decide whether it's slavery or whether, because it's time delayed or time constrained, it's merely extortion. But if your choice is between slavery and extortion, it's not a very good choice. Most of society believes that other people should pay tax. Most of society believes, quote, taxes are the price that you pay for the modern life. In other words, while I believe that people shouldn't be allowed to extort each other, most people in the world disagree. They believe that they should be allowed to extort other people for ends that they consider to be important. So when you look at these social science questions from the point of view of, first of all, what's moral, what's right and wrong, you do need to temper it with regards to what's practical and what's possible. In my declining years, Daryl, I've maybe come to agree from a practical point of view with you. If they could limit the threat or extortion or fraud to sort of 10% of one's income or 10% of GDP. I picked 10% not because I'm Christian, but it is in the Bible. And it seems to me that we're much more efficient today than we were 2,000 years ago. And if you could run the world on 10% theft then, you ought to be able to run the world on 10% theft now. I would prefer that the absolute number of theft in society be zero. But the truth is, I'm tired of listening to myself complain at age 69. And so I'm more inclined, like you, to be realistic.
Yeah. So what's thinking of like what's practical. What do you think is like practical in how our central banks, the government can fight inflation? I mean, I know that reducing the money supply is one of those things that people say, inflation. I mean, even Milton Friedman talked about inflation being, inflating the money supply, as well as like, when we had other forms of money, whether that was tobacco or things of that nature, cowrie shells and such. So what do you think is practical?
Boy, that's a hard question, Daryl. I think we waited too long. I think we're going to have a reckoning. I don't mean a reckoning necessarily like a biblical reckoning, but it seems to me that we need to undo the excesses, both the economic excesses and frankly the psychological excesses that we've built up in our society for the last 40 years. There's an expectation now among the populace that the government ought to solve our problems. And I think that we need to purge ourselves of that expectation, because that expectation is the bedrock of inflation. The practical method for dealing with inflation, well, there's always been two through recorded history. The first is to have a recession or depression. you, if too many people at a party are getting too drunk on the vodka, you take the punch away, right? And that ends the party pretty quick. The other is maybe a variant of the first, which is to say you reduce the stimulant and you raise interest rates. The circumstance that we're in right now, where the money that you get paid on your savings is so much below the deterioration of the purchasing power of the currency, means that you almost have to spend, you almost have to borrow. A long-term bond like the US 10-year Treasury, jokingly, is a certificate of guaranteed confiscation. They pay you 2.3% in a currency that's depreciating by 8.6%. You are absolutely guaranteed to lose 6% compounded. Curing inflation through government would be allowing the interest rate to rise to the point where there was a real yield on savings products. What that means is if the US 10-year Treasury is at 8.6%, in order to generate a real yield, the yield on the US 10-year Treasury would have to be something like 9% or 9.5%. And believe me, a 9.5% interest rate, which would translate to maybe a 10.5% first mortgage rate, would cure inflation really quickly. It would cure inflation while resulting in a lot of foreclosures for people who were on variable rate mortgages. It would keep a lot of first-time home buyers out of the market until they'd accumulated enough capital that they could put down a substantial down payment. It would cut consumer spending, and it would result in a lot of unemployment. So slaying the inflation dragon means undoing all of the excesses in society that have occurred as a consequence of people psychologically relying on government and government relying on financing current lifestyles at the expense of our children and grandchildren. So I really think they're between a rock and a hard place. And the reason why I've mumbled on so long, Daryl, is I'm not smart enough to have a real answer for you. I mean, I don't know how they get themselves out of this fix.
Yeah. Yeah. So, you mentioned quite a few, good points in there. So at one point, people didn't have to take as much risk. I mean, now, like, when you could just put your money in a savings account, yep. A CD, yep. And you're getting 8-9%, mm-hmm. I mean, that must have been the dream. I'm sure, where you didn't have to take much risk and be able to earn that much on your capital. So now we're at the point where savings rates you aren't getting anything. And then you have inflation. So you lived through a few, and you've experienced a few recessions. I mean, a few of those recessions didn't have this high inflation. I think we had one in, the 80s and maybe the 90s. And we didn't have, 9% inflation, I mean, according to the government. So what does this look like now, a recession with inflation?
Well, I did go through that. The period of the late 70s, we had real classic stagflation. We had a weak economy because people knew a reckoning was coming. They didn't know what the reckoning was going to be, but they knew a reckoning was coming. At the same time that we had high inflation. And it was an ugly period of time. Mercifully for the country, we ended up with a president who did a lot of things wrong, but he did a couple things right. He was a leader. That was Ronald Reagan. He said, and I'm not a huge Reagan supporter, except he did lead the country by saying, we're stealing our children's future. We got to stop. And he developed a political consensus around that. He was persuasive enough that the citizenry agreed with him that the rate of the growth of government had to stop and the inflation in the currency had to stop. And he was able to hire Paul Volcker, who allowed the interest rate on the US 10-year Treasury to increase from, if my memory serves me correct, 5.5% to 15.6%. And Daryl, that did the job. It was ugly. Before that, during the period of inflation, I was, at least I believed, a very wealthy young man. You know, everything that I touched literally and figuratively turned to gold. And because credit was so cheap relative to inflation, I was able to borrow to get ahead in natural resources and, you know, real estate and things like that. And boy, when they raised the interest rate, did I find out just how smart I was. So I went through that recession personally. I went from being a very wealthy young man, very confident, very hubris ridden, to having a negative net worth, which is to say the value of my assets was less than the value of my debts. So I experienced that recession up front and personal. And that's what's supposed to happen. You know, it really truly is what's supposed to happen. I don't know that collectively the citizenry has the will to endure that yet. I wonder what will happen after 3 or 4 years of inflation. Right now, Daryl, I suspect, in particular people your age who haven't lived through it, that inflation is of interest to people, but it doesn't terrify them yet. We've only been in identifiable inflation for 18 months. So somebody right now who gets a 4% pay increase thinks that they got a pay increase. They don't realize that after inflation, they got a 5% pay cut. They don't realize when they have money in the bank that the purchasing power associated with that money in the bank is declining by 8% compounded. People get angry when they go to store and a loaf of bread that used to be $2 is $3. They don't like it. They still remember $2, but they still buy the bread, you know? And when people go to the gas pump and they pay $5.50 a gallon, they remember paying $2 a gallon, and it irritates them, but they don't stop driving their car. If you go through this circumstance like we went through it in the late 60s and the early 70s, and the impact of inflation becomes cumulative and compounding, you figure out that you've had money in the bank for 4 years, and the consequence of that is that you've lost a quarter of your purchasing power. If rather than being antagonized because the price of gasoline goes up, you find out that you can't afford a new car, then the impact of inflation becomes personal. And as the impact of inflation becomes personal across a broad element of society, all of a sudden inflation becomes the critical social issue of the day, just like it did 1979, 1980, 1981. And I think it'll be interesting to see the way the country deals with it this time. We had an advantage then. I know it sounds odd, but we had an advantage then. Government debt as a percentage of GDP was about 25%. Government debt as a percentage of GDP now is 125%. And so we had more tools, we had more resilience to get through it. And I know this sounds ironic, but going into 1980, we had a greater degree of cynicism in society. We had less faith in government. We were coming out of a circumstance where in the late part of the 60s, there were broad elements of society that were disaffected from their government, not just on the right. The war in Vietnam caused young people to say, why on earth are these fat old senators drafting all these young men and sending them off 12,000 miles to fight a war that's of no threat to anybody? There was the war on drugs, which caused a whole bunch of society to say, you know, whose business is it what I smoke? There was a reaction in what are now popularly called communities of color about government-sponsored racism and segregation. So I think, ironically, the good news in 1980 is that there was less sense in broad elements of society that the government was a force for good. And unfortunately, since then, in 40 years of benign economic climate, I think there's a broader consensus in society that government is good, and that the money that government extorted from people and spent in the last 40 years did more good than harm. As you know, I don't happen to agree with that. And I'm afraid that people will look to a cure for inflation from the institution, government, that caused it. And I'm nervous about that. I'm nervous about a circumstance 3 or 4 years from now where people understand that they've been swindled, but they look to the swindler to save them. I think that people are going to be angry. I think that people are going to be confused. And I think that people are going to be needy, really, truly needy, in a way that they aren't now.
Yeah. Yeah. And that kind of like, looking at like the less faith in government, I was immediately just thinking of like Richard Nixon and like the Watergate scandal. I mean, we had like a president that was like, pretty much impeached or whatnot. He resigned or something. So I could see like less lack of faith in government, especially during that era. So I've read the book The Fourth Turning and kind of just looking at a lot of what's happening now in that context. And I've heard Doug Casey talk about like, potential civil war historically it's led to that. And, I don't think it's going to be like, my mom's coming out there with a 12 gauge shotgun, trying to blow somebody away. But what do you feel like the likelihood of things like that, occurring, like more conflict between the people because they can't really seem to get that the problem is the government?
I'm afraid there's going to be more civil unrest. As society becomes more politicized, we become more tribal. And I don't just mean black and white, by the way. We find a whole bunch of ways to subdivide ourselves. And if we don't find ways to subdivide ourselves, our political leaders do find ways to subdivide us so that they can co-opt various groups for their own ends. If you believe in politics, what you believe is that your perceived needs or the needs that you perceive society having are a valid call on other people's resources. And if we have a circumstance where people believe that the uses that they would put money to are important enough that they have the ability and the right to steal and extort that money from other people through government, necessarily means that you have competing people with competing needs, all of whom feel justified and in fact self-righteous. And I think that's a recipe at a minimum for divisiveness. But perhaps too, a recipe for violence. And I'm nervous about that. When I visit with people politically, they talk about the political causes that are important to them, and they believe that they have the right to impose their value system on other people. And that's dangerous because the other people have a different set of values, which they believe that they have the right to impose. So all of a sudden, we go from a circumstance where you have a video channel that allows me to talk to your audience, and I have a name that allows me to grow your audience, where we have a mutual interdependence on each other that's peaceful and voluntary, where we have a transaction that's a win-win. All of a sudden, in a politicized circumstance, you are a young African-American male, and I'm an old, bald, fat white guy. Rather than being mutually dependent on each other and existing in a cooperative relationship, you decide that as a consequence of history, I owe you something. And I decide as a consequence of my own self-interest that you owe money to some cause which is important to me. You follow what I'm saying? All of a sudden, barriers to free enterprise, free relationships between people get blocked by this artificial tribalism that's the consequence of government.
Yeah, yeah, yeah. That's powerful. Yeah, because I think about like with the level of tribalism, it's happening in almost all sectors that you could think of. I mean,
It's
you could think
terrifying.
of the Bitcoin community. You can think of like all type of stuff. But so going forward, self-sufficiency is a key. And we've talked about Malcolm X before, and as well as like his mindset on being self-sufficient, and that's kind of something that I'm thinking about. Like, okay, like how do I prepare for whatever? Make sure I got food and water, make sure I got guns, make sure I got gold and silver, and making sure that all those different things that I may need, because I may need to be self-sufficient at some point, or be able to lend a helping hand to someone I know, or someone that I may see in need. And I'm kind of seeing like more of that kind of sentiment is brewing, and we are going to have, obviously, with inflation or whatnot. I'm wondering like how is this going to play out with more dependence on government versus like being self-sufficient, because at some point something's going to break and the government can't bail everyone out. So I'm just kind of what does that look like in that scenario?
Well, first of all, I agree with you completely. And I think that you are yourself taking exemplary steps towards self-sufficiency. In the first instance, you're investing in yourself and your own education. You are thinking about circumstances, even thinking about the circumstance of self-sufficiency, rather than your call on the community, what you can do to look after yourself and look after people that are important to you. And by the way, there's nothing wrong with positive tribalism. It's just that you need to be part of a whole bunch of tribes where the tribal relationship is voluntary. One tribe might be the subscribers to your platform. You owe them a duty of information, and they owe you a duty somehow of compensating you for that information. That's all wonderful. And building up that community is your own first step towards self-sufficiency. Building up your education, understanding the need is an important thing. There are other needs too, of course. Despite the fact that savings lose purchasing power, you have to have savings because liquidity gives you the tools and hopefully the courage in periods of high volatility like today to be able to take advantage of bargains when they appear, rather than being shaken out of existing investments because you have no liquidity or you have no self-confidence. Understanding how to spot opportunity in crisis is important. I remember in 1982, as a consequence of very high interest rates, the price of real estate in many areas, a couple of which I lived, fell by half. And it was interesting that a house that hitherto had sold for $200,000 was selling for $100,000. And the house had a lot of bidders at $200,000 and had no bidders whatsoever at $100,000. So having the courage when an asset that you know will do well over time comes at a 50% off sale, having the courage and the education to take advantage of that is one of the aspects of self-sufficiency. When I get involved doing financial education, which, as you know, is something I really, really, really enjoy, I have a difficult time explaining to people the incongruity about people enjoying sales when they buy physical goods, but being afraid to buy financial goods when they're on sale. I tell this wonderful story. I may have told it on your channel. I may not have, but I'll indulge myself and do it again if you don't mind. When I was active in financial services practice, when I lived in California, my office for a while was one of those typical Southern California, fraudulent Mediterranean shopping centers. Little office building on my side, the big grocery store on the other side. And I told this apocryphal story of a couple coming into the center. And this was a traditional couple. So he looked after the finances. He'd come to my office while his wife would go to the grocery store. One particular week, she went to the grocery store and she saw canned tuna on sale for $2 a can. And it was a brand of tuna that she was comfortable with and happy with. Her family liked this particular brand of tuna. She thought $2 was a fair price. And so she bought 6 cans or something like that, you know. He came to the brokerage office and there was a stock that he'd heard of, you know, an oil stock or something. And it was $2. And he was familiar with that financial brand. And he thought $2 was a decent price. So he bought himself 1,000 shares. And they both go home reasonably happy with their purchase. 2 weeks later, they come back. And the tuna fish, which was then $2, has been marked up to $4. And the housewife looks at that and she gives the store manager a piece of her mind, you know, and she storms around. She eventually bought a couple of cans of canned chicken or something like that because the tuna was up from $2 to $4. She's pissed, you know. The husband comes into the brokerage firm. That stock has gone from $2 to $4. He thinks, boy, this is a great stock. It's gone up. He buys himself another 1,000 shares, you know. They go home. She's furious. He's happy. 2 weeks later, they come back. She goes into the store. And all the other housewives boycotted this overpriced tuna. So now the store's got a boatload of tuna, and they've marked it down from $4 a can to $1 a can. She's ecstatic. She buys so much tuna fish that her car's, you know, riding like this with all the weight in the trunk. The stock has gone from $4 to $1. Nothing's changed with the company, but the stock's off. And the husband sells all his stock in disgust. And what I'm suggesting is that people develop the mindset where they buy stocks like they buy tuna. If nothing has changed and the price doubles, it's half as good. If nothing has changed and the price falls by half, it's twice as good. But for some reason, people want the psychological verification of an increase in price to give them the courage to buy a financial narrative. And what I think you're beginning to do and what you're helping your audience to do, I hope, is to invest in their attitude enough that they'll buy stock like they buy tuna. That's the best way that you can arm yourself for periods of turbulence, periods of volatility, like the kind that we're in.
And would you say, like, so you've mentioned the importance of cash, and so, you know, there's obviously like different types of investors. I mean, you have short-term, long-term, day traders, swing traders, blah, blah, blah. But, you know, right now the market is so, you know, volatile, you know, would you yourself say like a situation where someone's like dollar cost averaging, or someone's like, okay, wait for, you know, the Fed to reverse policy? I mean, obviously oil isn't going down. I mean, it hasn't went down. It's been holding strong. And there's other resource stocks that are cheap. And so I guess the stocks that are getting killed most are, you know, tech, and I know you don't really deal with that, especially when you do your portfolio rankings. No tech, no marijuana stocks, no crypto. You also, I'm gonna make sure, I want to let y'all know that. So would you say like you know, people should be, you know, dollar cost averaging as far as like when they see, you know, falls in the market, because, you know, obviously inflation benefits commodities?
I actually like dollar cost averaging because I don't think anybody's smart enough to time the market. I think that your risks of being out of the market are greater than your risks of being in the market over time. And I think, too, that people need to invest for time. You talked about day traders and swing traders. That's not investing. That's a job. That's a very, very, very different circumstance. And somebody who isn't going, if somebody's going to be a trader, they're going to be full-time or they're going to be a victim. If you think that you're going to drop down 2 hours a day, after you had your job selling cars or teaching school or whatever it is you do, if you think you're going to outcompete somebody who has 15 years of experience trading, who's trading 10 hours a day, who have access to all the information, if you think you're going to beat those guys, you better be buying pot stocks. You know, I mean, it's just not going to work. So let's get that one out of the way. People need to invest for the long term. They need to have the guts to buy stuff that's cheap. And I've come to believe, I don't dollar cost average, but I've come to believe for most people that have lives, you know, the dollar cost averaging is a good thing. What's more important is what you dollar cost average into. I don't not do technology because I don't think technology is a good thing. I don't do technology because I don't understand it. You know, I want to play to my own competitive advantages. I have competitive advantages in investing in conventional financial services, which is to say banks, brokerage firms, insurance companies, and natural resources. I don't do technology because I think technology is bad. I don't do technology because I can't spell or pronounce most of the technologies that people are asking me to invest in. Same thing with crypto. I don't do it because I don't understand it as well as people that I would be competing with. So I really, you know, I mean, I keep going with this boring message, but the most important investment that you can make is in yourself and your education and your knowledge. It's more important what you dollar cost average into than dollar cost averaging. I believe, like you said, in the oil and gas business, I think the oil price can fall a bit, but the oil companies are priced for $70 oil. The oil could fall quite a lot. Natural gas stocks are priced for $4 gas. We have $8.50 natural gas. Could, if you bought an oil stock for $100, could it fall to $75 or $80? Sure. But when you bought it at $100, knowing it was worth $130, you're getting paid a nice dividend. If you're thinking about holding it for 5 years or 6 years, the fact that it fell from $100 to 70, while unpleasant, isn't important at all. It doesn't matter. You know, maybe the best stock for most people that they could have owned in the last 50 years was Berkshire Hathaway, Warren Buffett's company. 4 times at least in the last 50 years, that stock's fallen by 50% or more in 18 months. If you look at the share price chart of Berkshire Hathaway, 1975 to today, you can't see those 50% declines. It was really unpleasant to go through them, but they ended up not mattering. So understanding that these declines are going to happen, understand that volatility is going to happen, but understand that you must invest over time. And the only way that you have the patience to invest over time is by developing the knowledge in yourself that you have the courage of your conviction, is what will allow you to survive the times that we're in. Because, Daryl, you're competing with 100 million people whose investment methodology has got a hunch, bet a bunch. If you can do better than that, you're going to outcompete them, and that's what you have to do.
Yeah, that's some really good information. And you know, having the capital to be able to, you know, buy things when they get cheaper. I mean, and I imagine some of these stocks are going to get cheaper. I mean, uranium, you know, went down a little bit, so I started buying some more shares. I'm like, okay, yeah, this is a good entry point. So, and thinking about this, I was thinking about something like as far as, you know, what we've been seeing lately, especially with the crypto market. And then I had Justin Hune on. He talked about, he read, I think it was an article about 25 trillion being wiped out from the market. So a lot of people during the quantitative easing, you know, they felt good. They felt they were really good traders. You know, all these things, you know, especially a lot of people in the crypto community. And I mean, and even in the growth stock community, they felt they were just professionals. And we had, you know, our boomer generation, you know, letting us know like, hey, this has happened before. This is historical. You know, you may feel good right now. You may feel like you're on top of the world, but there's going to be a day of reckoning. And we have seen that day of reckoning, especially in the crypto market and the tech sector. You know, so what's kind of like, obviously, you know, I know there's, you know, you have the younger crowds that come in and they feel like they know it all. I mean, at some point, you know, we all may not have listened to our parents or whoever raised us, you know, like, oh, well, what they got to say is boring. I know it all. And then we have to go, you know, burn our hand on the stove or, you know, or whatnot. So what would you kind of say to that? I mean, because y'all were calling this and y'all seen this. Y'all seen this before.
Yeah, I think I have seen it before. You know, the fact that, boy, there's so many ways to unpack that. Let me think through what I'm going to say before I make a fool of myself saying it. People's expectation of the future is set by their experience in the immediate past. And when you're in a bull market, it becomes seductive. I mean, you even make money on your mistakes, you know? And the fact that the price of these assets going up is making them less attractive is an odd thing. If you think something's worth $10 and it's selling for $5, that goes to 10, you feel good about it. And the fact that it went up sometimes allows you to say, well, I wasn't right saying it was worth $10. I think it's worth $15. And you don't think about what's changed. You just think about the psychological verification that you got from a rising market. And the consequence of the fact that your expectation of the future is set by your experience in the immediate past means that as prices go up, which is to say, as the relationship between price and value decreases, your psychological feeling about the narrative increases. And the same thing happens the other way. You think something's worth $10 and it falls to $6. The price causes you to question the value of the narrative. You don't look at the thing as being undervalued. You think about it falling in price, and that scares you. So again, your expectation of the future is set by your experience in the immediate past. That's why you get these psychological excesses called bull markets and these psychological deficits, which are called bear markets. If you can discipline yourself and develop the skills so you have a sense of understanding, at least within ranges, what something is worth, then you can put the price in context. Then if you think something is worth $10, you're going to aggressively buy it at $5, and you're going to aggressively sell it at 15. Until you've developed both the discipline and the knowledge to do that, you are likely to trade incorrectly at both extremes and lose money.
Yeah, that's very important. So with the commodities, bull market, what would you say would be some key things you would look for, you yourself would look for when, let's say, sentiment is very optimistic, it's on CNBC, it's, everywhere. Obviously, in The Intelligent Investor, Benjamin Graham talks about running the opposite direction. What are some things that you would look for when we are at probably closer to the peak of this commodities bull market, and you would look to, kind of exit or take money off the table or whatnot?
My experience has been when natural resource-based companies are enjoying 50% plus operating margins, which is to say when oil companies, by the way, as they are today, are selling oil for $120 a barrel, and all of their operating costs, including prior year write-downs, are less than $60 a barrel. When you're operating on 50% plus profit margins, particularly when you're operating at 50% plus profit margins, and the market price of the company exceeds the net present value of future cash flows at today's commodity prices, which is to say a market that's priced for perfection in a commodity that's priced for perfection, means that companies have very, very, very low or negative cost of capital, so they can reinvest money to increase supply very rapidly. At the same time that high commodity prices make people consume less. Those are very dangerous times. I'm personally able to continue to invest in oil companies despite that, because I think that there are headwinds in terms of policy. What I'm seeing is that although the oil companies are making enormous amounts of money right now, they're afraid to reinvest it. They're afraid to reinvest it because they get criticized by Biden and Trudeau and Greta Thunberg and all these kinds of people. So the normal economic response that you would see from high oil prices is to increase oil supply. But the oil industry right now is deferring over $1 billion a day in sustaining capital and new project expense, at the same time that oil and gas companies, relative to their free cash flows, are still cheap. So I'm violating one of my own tenets now. Normally, a circumstance where companies enjoy 50% plus operating margins across the board is one where things are unrealistically dangerous. What I don't see keeping that company in the oil space is I don't see the oil company share prices being so high that it gives them a low cost of capital. I see them, rather than making capital expenditures, increasing dividends and buying back shares. On the other side, we talked about this back when you and I first started having conversations a couple of years ago. On the buy side, when you see a commodity that's necessary for the material well-being of humankind, that's selling at a discount to total production cost, that's a no-brainer buy sign. You know, when oil was selling for $20 a barrel, the International Energy Agency said that the fully loaded cost to produce a barrel of oil was $60. So you make the stuff for 60, you sell it for 20, you lose $40 a barrel, 80 million times a day. It's pretty clear that there's only one of two outcomes that can happen. Either the price of oil has to go up to $60 so the companies earn their cost of capital, or your car's not going to start. Those are the only two choices. Now, everybody seems to want to buy these companies when they're generating 50% free cash flow margins, which is to say when they don't have to go up anymore. And nobody wants to buy them when they have to go up. And developing your mind so that you have the ability to take the other point of view is what you need to do in capital intensive cyclical businesses like natural resource based businesses. I think the other thing that your audience needs to do is, you know, we're going to go through some tough times, Daryl. We're going to go through some tough times. And you need to continue to cultivate an optimistic mentality. Every generation seems to go through times like this. I remember being very afraid in the early part of the 1970s, and I was visiting with my grandfather, who had a lot of experience, and he was listening and sort of shaking his head. And he says, you know, son, my generation went through some kind of tough things too. We had the Depression, we had World War II, where we didn't know if we were going to be blown up, you know, and we got through it, and you're going to get through it. And so I think it's important that when you're considering all these things, you don't let your fear paralyze you into indecision. You're going to get through it. And if you keep your head about you when everybody else is losing theirs, you're going to get through it better than you otherwise would. So although we're all attracted to resource narratives and precious metals narratives, the country's going to survive. It's going to go through some rough times, but there'll be a point in time when the S&P 500 is sold off by 50% or 60%, and nobody wants to own stocks. Like 1977, 1978. I remember the Dow, if my memory serves me correctly, the Dow was, at sort of 800. It had a pretty good run over 40 years from, 800 to 30, it had a hell of a run. And there will come a time when people your age and in your demographic need to buy the S&P 500. They need to buy the biggest and best companies in the United States. I'm not talking necessarily about the tech giants that don't have any profits. I'm talking about the Pfizers and the Shearing Plows and the Exxon Mobils and the Procter and Gambles, those great, big, fine companies that make America and in fact make the world. I'm not saying to buy them now during periods of low interest rates and stuff like that, but buying those companies when nobody wants them, and there will, I think, come a time to do that, will be an important thing to do. What's important is I think that you're going to make a lot of money in the commodity and natural resource narrative. And the consequence of that is that when commodity prices, and I think it's a one question trade, higher than they do now, and you're feeling real smart because you own all these resource stocks, that you don't believe your own BS, that you understand that these things are cyclical. And when you start feeling real smart, when you start feeling real justified, that's the time you got to begin selling and looking for something that you're afraid of that's cheap.
Mm-hmm. Yeah, I was thinking, that's the time where you send your portfolio to Rick Rule.
Well, I would always encourage that, of course.
Yeah, I was, and for you all that have not submitted your portfolio before, Rick is a hard grader on companies. He's a hard grader on companies, and if you find yourself getting emotionally tied or to any type of company or whatnot, do not be surprised if Rick comes in with his methods of grading and grades it at a low number, which would be a higher number in your rankings, I think.
Daryl, as the share prices fall, my rankings are getting more generous. I'm a sucker for bargains.
Yeah, for sure. So, I appreciate you coming on. Let's chat a little bit about the symposium, what people can expect. It just looks amazing. I go to that site, I get pretty excited and everything. It looks like it's going to be a lot of fun. But what should people expect from the symposium?
Daryl, I think this is my 30th annual symposium. 28th live. We'd had to do 2 virtual during COVID times. And what's always set our conferences apart from other people's conferences, I think, is the architecture of the conference. We have these big picture macro thinkers that allow you to put the world in perspective. Daniela DiMartina Booth, Nomi Prinz, Jim Rickards, David Stockman, former budget director in the Reagan administration. Doug Casey, who's always amusing in a big picture, makes me look like a moderate. So we like to bring in these people who can discuss global macro from the point of view that you wouldn't see on CNBC or here in the Wall Street Journal, to give you an independent point of view. At the same time that we do that, then we bring in some of the best analysts and money managers in the world. Once your perspective on the world has been assisted with these gurus, then we bring in people that try to teach you how to make some money where the rubber meets the road. If you believe this is true, this is what you do. This is how you do it. These are the companies that you invest in. So we try to be practical as opposed to merely sort of ethereal. What's more important than that is at every conference, understand these are natural resource conferences. You don't come to this conference to learn about crypto. We always have this group we call the living legends, who are people who have built multi-billion-dollar companies from scratch. That's important because you learn what they're working on now. There's some opportunities there. But it's more important because they teach you about the lessons that they learned building a multi-billion-dollar company. And they tell you how they employed those lessons to become better investors themselves and how you can use those lessons yourself to become a better natural resource investor. That's always the best part of the conference from my point of view. The fourth thing is the exhibitors. At most investment conferences, exhibitors are treated as advertisers, which is to say their revenue. At my conference, my attendees have told me that the exhibitors are content. And what that means is that the exhibitors have to offer content. They have to offer opportunity, not just advertising revenue to me. So every exhibitor at our conference has to be owned. Every listed exhibitor has to be owned in accounts that are either my accounts or accounts I manage. Now, it doesn't mean, sadly, Daryl, that every stock I ever go buy goes up. What it means is that I have vetted every exhibitor well enough that I've invested my own money in them. At most investment conferences, the qualification to be an exhibitor is that your check cashes. That's all that's required. Our qualification is much higher. I'm confident enough, having done these conferences for 30 years now, that if anybody pays the tuition to come to my conference, they attend the conference and they don't feel they got their money's worth, I'll give them their money back. All they have to do is ask and I'll give them the money back. Full money back guarantee. We've done a good enough job over 30 years that requests for refunds have never been above 0.5%. So the actual risk to me is fairly low. But I think that statement of confidence, which is to say, if you risk the tuition and didn't feel that you got your money's worth, I'll give you your tuition back. That statement of confidence sets this conference apart from every other conference in the market.
Yeah, that's powerful, and that sounds like a great opportunity. So you all, the link is in the description. Be sure to go click that link, sign up for the symposium, get some great information, content. I mean, the thing with the billionaires that set up the businesses from scratch, that sounds amazing.
And you know what? You get to hang out with these guys. I mean, following Robert Friedland or Bob Quartermain around the conference hall and seeing what exhibitors they stop at and talk to is cool. And we have some fun there too. Like every year we have a harbor cruise. We're not in Vancouver Harbor this year. We're down in Boca Raton, Florida. So it'll be a cruise in the Intercoastal Canal. But, you know, being able to cruise up and down the canal in a nice boat with all these folks, you know, eating hors d'oeuvres and drinking wine. Let's just say that you don't learn everything that you learn there in a classroom. We find a way to have some fun down there too.
Yeah, that's amazing. Well, Rick, I want to thank you for coming on. You all be sure to submit your portfolio to Rick. I'll leave that in the descriptions, or they go to Rule Investment Media /rankings.
No, you don't need to do that anymore. Just Rule Investment Media. Enter your natural resource stocks. As Daryl says, no crypto, no pot stocks, no tech stocks. Just things an old guy like me understands. I'll rank them 1 to 10, 1 being best, 10 being worst. If I think my comments have value, I might comment on some individual issues that you might own. And that's a service that I've really enjoyed providing to people.
All right, cool. And then the link for the symposium will be in the description. Thank you, Rick, for coming on today.
Always a pleasure. I look forward to doing it again in the future.
Yes, thank you.